Hello friends, this is Raj Sastri from Raj Option Trading. Today is April 5th, 2021. I want to talk about one of my favorite companies. It's Editas Medicine, the ticker symbol EDIT. They're into healthcare and biotechnology. So the question the scientists at Editas ask is, what if you could repair broken genes? As most of the times the genetic makeup dictates what disease you might get. So these guys are at really repairing the broken genes, and they have a novelous idea to really work through this CRISPR gene editing technology and make sure the bacteria are immune to this virus. So that's their main thing. So they're also offering the gene edited machines to offer potential cures to patients with severe disease. So really, these patients with severe disease, they don't have too much hope. And with this editing technology, it really brings that cure to these patients. So with that in mind, the global genome editing market, it's going to grow at a compounded annual growth of 17.0 percent during up to till 2025. So this is really a very interesting area, very the area with lot of growth. So let's look at this company and see how can we invest in this company and take it from there. So um, this company Editas, they are best in class when it comes to gene edited machines. They got this Vivo and ex Vivo, and they have various gene editing medicines. They have Edit 101. It's curing the genetic blindness. Think about folks with the genetic blindness. I mean, it's good to have a cure with this Edit 101. And they also have they have various other they're looking at other unmet needs, and they got 301, which is really around beta thalassemia, and they got various indications here, one for solid tumor here, and they're in a good condition when it comes to financial and operational metrics, and they have good manufacturing facilities and strong intellectual property position, and also great operations. And they also brought in very good leadership from the industry. So with that, let's look at a quick profile of this company. Editas Medicine, it's a clinical stage genome editing company, and they focus on developing transformative genomic medicines. Really, they kind of basically cover a lot of unmet needs in people. The blindness in childhood, the hearing loss, retinal degeneration, sickle cell disease, beta thalassemia, and all these killer diseases. These guys can help really cure those with the gene editing technology. And the stock price is around $42. They have fell hard after the last earnings, and the market cap is $2.89 billion. And as you can see here, they got a good revenue, $90 million. Revenue growth at this point is negative. This company, like any other biotechnology company, they got some quarters where they're really doing really nicely. They've got some drugs approved, they're going gangbusters, and some quarters like the one we had just now, it's a little bit downer, meaning they got some rejections from FDA, or some of or the revenue itself is a little bit lower, or EPS is lower. So think of like a boom bust type cycle. Some quarters they kind of hit it out of the park, and some quarters there are some issues around approvals, or some EPS or earnings. So with that, let's go into the leadership itself. Before I do that, if you look at the chart here, it's really, for a long time, this is a 3 year chart. They've been going up and down, up and down, up and down. Off late, last year, they kind of took off like a rocket ship. And now they're kind of stabilizing, as you can see here. So I feel, the punishment is kind of overdone at this point. Now they will kind of stabilize and take it forward. So they hired a new CEO, James Mullen, and he served as a chairman of the board of directors since 2018. So really he's not a new person for Editas, but he's a new CEO. And previously he was CEO of Patheon, and he was also in Thermo Fisher, and he was in Biogen as a CEO. Biogen, as you know, it's one of the famous biotechnology company. And if you look at his history, he's got a lot of expertise in the biotechnology area and the life sciences area. So I think he's a very good choice to lead this company. And if you look at the news headlines, Motley Fool says here is the holy grail of gene editing. Everybody kind of likes this company. They do a very good job, and they kind of sold off, after the earnings report because I think they did not meet the consensus estimates. And even the Bluebird Bio, as you might be knowing, Bluebird Bio is also working on some of the genetic medicines. It's also a good company, beaten down so badly. Um, you know Now, even though they did the earnings back in February, now they're kind of getting the groove back, and they're kind of consolidating and going up slowly. I think it's the right time to pick this stock up. So with that, let's look at key competitors. In any market, we got to be looking at the key competitors and how this company that we are looking at is doing against the key competition. So with that, these are the top players in the gene editing market. And some of these companies may be a little bit related, may not be directly in the gene editing. So with that, if you look at from the top here, Intellia Therapeutics, and it's got a 574% performance in last 1 year. So this chart is organized by performance. One at the top is highest performing, and also I got the price, market cap, the sales. I also pay very close attention to 1 year sales growth and quarter to quarter sales growth, and look at the institutional leadership and gross margin, very important. And last but not least, we got to look at the price to sales ratio. A high price to sales ratio means watch out, it's a little bit pricey. If it is a little bit lower, then it's manageable. And then I look at the performance itself. How is the performance? Is it too much on a yearly basis, then it fell off, or is it increasing, decreasing? I kind of pay close attention to how is the performance. Is it bouncing in the last 1 week, or is it still degrading? So with that, I highlighted some of my favorites here: Moderna, Veracite, Collectis, Rare. This is again a good company. Editas. Even after this huge fall, they are still up 114% for last 1 year. So it's a huge performance improvement. And we got Blueprint Medicine, Axis, Illumina. These are all good companies. And as you can see, they also performed nicely, but not as nice as Intellia. And we got some of the folks here, a little bit losers, I would say, on a yearly basis. These are also good companies like Regeneron, Gilead, Vertex, Bluebird Bio. And Vertex also has got good, things going in their way. And Bluebird Bio is also working on a good, indication. So with that in mind, even though these companies are down, I would still invest in them. As you can see here, the gross margin of these companies, 100% for this, Blueprint Medicine, and these are all solid gross margins. So what I look for these companies is really a, positive sales growth or double-digit sales growth and a good gross margin. In this case, I think it's zero because these companies are still growing, and those are the two things I look for, and good performance. So with that in mind, our company we are talking about right now, Editas, is right here, number 11th, and I think they're doing very well from a sales perspective. 1 year sales growth of 275%, and quarter over quarter it's a little bit low, but I think it's manageable, and nice institutional ownership. These big funds are buying into this, And short ratio, as you can see here, it's got a little bit higher short ratio. I'm hoping by now shorts have made their money. They are looking for exits at this point. I think we can clearly come in at this point and buy some and keep it for a long time. And gross margin for this is zero right now because they are, really growing and putting money into their product itself. That's why. And price to sales ratio from a valuation perspective not too bad. And as you see here, on a yearly basis, it's 114%. And as you go into 6 months, they're a little bit down. 3 months, they're even more down. And now, 1 month, they're kind of improving. 1 week, they're improving. So this is what I look for. Is it down so much? Like, in 52, down from 52-week high, 57% down, and they're down for 3 months. But now they're getting their groove back. So they're kind of consolidating and making their, move higher at this point. So that's when I want to come in and buy some and keep it for long term. So with that, let's go into quick fundamentals. Um, from a stock price, it's $42.77. Market cap is 2.90 billion. And if I got here a quarterly chart of this company by which has got various data points here. I got all the way from 12/31/2020, which there is reported just in February, all the way to 9/30/2018. So from a market cap perspective, as you can see here, clearly, it's up and down. It was up 1.4 billion. It came down. Now it's 4.7 billion. And right now, after the quarterly earnings, they're back to 2.90 billion. So as you can see here, this company clearly has got its up and downs. As they got good medicines, good FDA approval, stock bounces very hard. If there is a missed quarter or a regulatory hiccup, the stock bounces, comes down crashing. So that's why with these type of companies, it's very good to catch them when they're down. Don't worry too much about, hey, it might fall further down, but hold on to it. These guys will really surprise you very nicely when you don't expect them to. So with that, from a price perspective, they've been, consistently improving the price from $30 all the way to 70 back in 12/31. But now with this crash, it's back to 42.77. So that's why these companies are boom and bust. You got to invest in them when they're down, and keep adding when they're down. And sales, quarter over quarter sales perspective, they were doing very nicely in some quarters, and some quarter they're very much down, double digit down. And here they got 100% quarter over quarter sales growth, 170%, 361%, 1,533%. That's why stock kind of took off earlier last year. They were showing so much positive revenue change. From a revenue per change perspective, they've been surprising last 3 quarters nicely, positive surprise, and they've been doing negatively for a long time, as you can see here. So this company is known to be inconsistent when it comes to earnings because of their the very nature of the business here. From an EPS perspective, I think they did a negative surprise. This is why stock kind of got dinged. It did not meet the consensus EPS estimate. And they got a good amount of cash. They also got some financing done. They got some money in, so good amount of cash. These guys can survive easily, and debt is manageable. And free cash flow and operating cash flow both are negative. you know Given the company is really investing heavily into R&D and the product development. Gross margin is zero. Operating margin and net margin are negative. Price to sales ratio is a little high, but it's manageable, not too bad at all. So with that, from a reaction to earning, last 2 times when they announced, last time down 22% because of this EPS miss. Before that down 1.4%. previously 630 and 331 2020, nicely up 18 and 11%. Back in 1231 2019, down 10%. So you get the picture. This company is not shy to really, show their true color. They will basically, call the way it is, and they will take the hit if it's required. So with that, I feel good about investing in these type of companies when they are really beaten down, like now. So with that, let's go into earnings result itself, the transcript. I will not go too much into this. You can read through. At the high level, they beat on the revenue itself. From revenue perspective, there is a revenue beat. But what happened was, from an EPS perspective, earnings per share perspective, they missed. So that's why the stock got dinged. And also, they're talking about, they beat the estimate. That's good. They also had some, the decline in revenue because of this Allergan collaboration. It's a, basically it happened a little bit late. That's why, it's a little bit decline in the revenue. And they also had some, new agreements with AbbVie, which is good. And expenses were up. This is one thing they talked about. Their expenses were up 61.5 million from a year ago, due to expenses in the development of this new, the blindness disease that we talked about. I think it's a good problem to have. You got to invest in the R&D to, bring out the right drug in the market. I'm good with that. And they also got some FDA approval, which is good. And they are dosing these patients. They got some, first batch of patients already dosed up, which is good. And they also got some financing, and they got 250 million net proceeds, which is good. They got enough money to, carry the operations. Good amount of cash in the balance sheet. And I think overall, I think, good story here. Now we look into their earnings, the past earnings. Past earnings can be a good indicator for you to really look at any stock, for that matter. If you want to invest in a company, go through a couple past earnings and see if you can, look at the pattern. If you look at the latest earning back in February 25th, that's a Q4 earnings. This company's quarters will align with the calendar quarters. The company missed on the EPS by 12 cents, and they beat the revenue by $5.8 million. That's why the week they announced, stock fell down by 22%, and even after that it fell again by 5%. Now they're recovering. I think it's a good time to invest now, and keep it for maybe a quarter or two or even longer, because the moment they do a good quarter, stock will shoot up. If you can see some of the previous quarter, they shot up nicely. And the quarter before, company did a beat on the EPS as well as revenue. I think stock initially took some beating here, but then they went up nicely, and they did really well in December January timeframe. And this is the quarter Q2. They beat both by revenue and EPS. Stock shot up. You get the idea, right? I mean, basically, whenever they do really nicely, they kind of shoot up. But if they do a little bit bad because of missed expectations, they took a big beating. And this quarter also, they had some unexpected expense, which also kind of increased the likelihood of this huge decline. And as such, gene editing space is very complex, very very R&D intensive type business. So with that, let's go into performance on a yearly, monthly, weekly, and daily basis, and see what we can glean from it. So from a yearly basis, by looking at this, you should get an idea. 2016 they did nothing much. 2017 they did 89%. 2018 negative 25. 2019, 2020 were good years. Very nice profit here. 2021 so far down 38%. So this company, can go all over the map. That's one thing to notice. And also, if you look at the range here, 2016 from 12 to 42, almost like three times, range. You know, 2017, 13 to 31. So, this company gives good pullbacks during the year. You can always wait for the pullback and buy. No need to buy when the stock is high. Next, monthly performance. As you can see here, they got up, down, down, up, down 8%, up 45%. So, this company gives plenty of chances for you to buy. And now, if you look at February, this is when they announced the earnings, down 28%. So, this is where, you know, you can really buy this stock when it's down and keep it for a long time. And even if you want to trade, it's a good idea, because it gives plenty of opportunities because it goes up and down so drastically. From weekly performance here, we got earnings on this week here, down 22%. As you can see, now they're getting their groove back a little bit, which is good. From a daily performance perspective, earnings was somewhere here, 20. Let's go back here. Earnings was on 25th. So if I go back here, 25th they were up a little bit, but before the earnings they went down. On the 24th, I think this is the day the earnings was announced. They went down, but next day they went up a little bit. Then they went down again. So I think now they're kind of bouncing back. Now it's good time to really buy some. Now let's look at their monthly performance matrix. The way to read this chart is we got years on top, 2021, 2020, 2019, so forth. And then we got the yearly performance, year high, year low from a stock price perspective. And then we got a month here, December, which is a quarter end, November, October, all the months of the year. And the way to read this chart is really by looking at here, you should know, how is it doing on a monthly basis? Can we spot some pattern here? As an example, this stock is down January, February, March, all the 3 months of this new year is down. That's why so far 38% down for 2021. But if you look at the pattern, it did the same thing last year. 2020 also did something similar, down January, February, March. So, and then they went up in April. So I'm thinking something similar will probably happen in this April also, and they can get a good bounce back here. And if you look at the year before, they went down January, February, and then again in May. So you can kind of sort of understand, first quarter, like, first 6 months of the year, this stock kind of has some jitters, but then somewhere in the middle, it has some jitters again. So anytime there is a quarterly earnings, it kind of, as you can, September is the quarter end. I think they announced somewhere in October. So you could see some pattern here around the quarter end. They tend to be a little bit, bouncy. So you got to watch out for that and prepare accordingly. Maybe just after the quarterly earnings, it's good time to buy if they're down. And one more positive thing I see by looking at insider trading is um, the director, Jessica, she bought 5,800 share, and the CEO here, James Mullen, he bought 25,000 shares. So which is which shows the confidence of these senior leadership in the company. So I think it's good to buy along with these leaders of the company and take it from there. And from a technical analysis perspective, as you can see here, we got a 18-month chart of Editas, and stock has done nicely, but off late, since last December or so, stock has shot up so much, did very nice. But this year, as we talked about, kind of went down, and now they're getting their groove back slowly. As you can see here, stock is kind of stabilizing, and it's trying to go about the 10-day moving average at this point. and probably it's trying to cross the 20-day moving average also. So soon the 10-day and 20-day become support, and it will bounce off of this 50-day moving average also if the stock goes up. From a RSI, relative strength index, I always watch for relative strength index because it tells you where the stock is in an oscillator perspective. If the stock goes too high, for example, something like this, it's not good time to buy at this point. You'd rather wait for stock to come down a little bit and buy somewhere here. Same story here. Stock was overheated here. That's why it became overbought. But if you waited a little bit, surely it came down here. Now it's kind of oversold. So you can get the idea here, as the stock becomes oversold, then you buy it. As it becomes over bought, like here, then you sell it. So that's a good idea to look at these type of stocks, because this is by looking at the pattern, whether this stock goes by RSI, either a historic pattern. If so, I think it's good to look at that and plan accordingly. From an implied volatility perspective, right now the IV rank, implied volatility rank is 39.1%, which is relatively low. So I got two lines here. The pink line here is the historic volatility, and the blue line here is the current implied volatility. So anytime the blue line is below the historic volatility, that and IV rank is low, that means IV is relatively low. When the IV is low, we can buy things like call options. It's good to buy call options or call spread. You could even buy things like straddle. You can do those things because you are a net option buyer at that point. And also when the RSI is low, you could buy the stock outright, and then you can sell later. From a volume average perspective, before you go to volume average, let's look at DMI. From a DMI perspective, um, what I like about this little bit is the blue line is trying to go up and the red line is trying to go down. So typically, the chartists want the blue line to be above the red line, but I also look at the trend. How is the blue line trending? How is the red line trending? So trend seems to be right. Blue line wants to go up. Red line wants to go down, which is a good indication. We are catching this a little early. From an on the balance volume perspective, I like it because it's kind of trying to go up, which is a good sign. People are buying into the stock. And from a check-in money flow, it's kind of indicating at this point, the big money is, slowly coming into the stock. It kind of bounced back. Now it's a little bit flat. So I think, money is flowing into the stock now slowly, which is a good sign. So overall, I think it chart looks okay. It's trying to bounce off of the lows, which is good. Now let's go into a 10-day, 30-minute chart. In a 10-day, 30-minute chart, as you can see here, it's kind of it gives a little bit better picture. Implied wall, I think it's kind of jumping at this point, which is okay. Um, Here, the blue line is kind of trying to go above the red line, which is good, which is it's not there yet. And on the balance, volume is flat. Check-in money flow is trying to go up a little bit, which is good. It's kind of indicating the smart money is trying to flow into the stock, which is good. Now let's look at option chain itself for this stock, Editas. So if you look at the option chain here, stock price is at $42.86. And if you look at 42, it's somewhere here. There's a huge volume here, 338 open interest. And as you can see here, there's a lot of open interest in the out of the money call options, which tells me people are really betting the stock is going to go up. And of all this open interest, the it's very high at here, $100 strike price. So people are even betting this stock will go to $100 by 20th of August, which is 137 days out. So at the high level, I see a lot of call activity as you can see here, and there is also some put activity. So people are also, buying some put options. So by this volume here, put option is highest volume is around $50. People are buying this $50 996, hoping they can make some money if the stock stays below 50. So now let's look at aggregate volume of call options and put options. For that, we'll go to today's option statistics in Thinkorswim, and it tells me the total call volume is 2,386, which is huge. Total put volume is very low, 433. That makes put call ratio to be 0.18. So, when the put call ratio is that low, that means, people are really bullish on the stock, and very few bears, who are buying the, put itself. So it's a good indicator to show, there is confidence in the stock and people are really, and in the options market, people are really buying the call options. So now we looked at fundamental analysis, we looked at technical analysis. What do we do now? So I feel company is doing well. They brought in this new chief scientific officer. I think this Charles Albright, left company, and we got this new CEO now, Jim Mullen, and he replaced Cynthia Collins. He's an industry veteran. I think he will do very nicely. He was ex Biogen CEO. I think he will do well. And company expects to report results from early stage clinical study for Edit 101, treating the rare genetic eye disease. I think that's a good indication here. We'll wait for the result. And Editas also incurred a loss of $1 per share because of the their loss was a little bit wider than expected, so that's why stock took a beating. And the R&D expenses were up a little bit, up 76.7% from a year ago, due to expenses. I think which is a good indication they got to make sure their drug is rock solid. So with this, I feel the stock is oversold. It's a very good buying opportunity. I've been looking at this stock, and every time you buy after this company missed the earnings, it's always a good buy. With that, I feel confident buying this stock and holding it for a long time. Thank you very much. Happy investing.